Hi guys, don't forget to like, share and join our Telegram channel by clicking on the link which you can find in the description below. Remember, this is our only official Telegram channel, so do not be scammed. If you do not have Telegram, you can always download it so you can interact with us. Hi guys, welcome back. We're back with another video. Hope you guys are doing good and you are trading well. If you are new here, don't forget to hit that subscribe button and leave a like for the YouTube algorithm, and also leave a comment and tell us where you're watching from. Alright guys, so today we're going to be talking about liquidity and BTMM, right, and what is meant by hitting the stops or not trading until they hit the stops. I'm sure you've heard this if you've been trying to learn BTMM, right? Don't trade until they hit the stops. So basically liquidity, right, to make it simple, it's just money. All right, remember, in the market is manipulated by the big guys, right? For those who've been going through BTMM and these, you know, your market makers, right? And basically they move the market where the money is. Sorry about that. Where the money is. So as we can see, you know, most retail traders, when they, you know, as we know, there's strategies out there, and traders would be looking at this as, you know, their support, right? And we know that they stop losses below this area, right? Because a trader is taught, you know, to buy at support. So this is where the money is, right? This is where the money is. Right, so the people who manipulate the market, the big guys, will push price and grab that money, right? That's the liquidity. It's needed to move price in Forex. So this is where would actually identify, right, imbalance, right, as price pushes up, right, giving us a higher high, right, and then correcting back down to this area, right, and then we continue going up. So we can also see that as we're building this liquidity, right, they will trap. So they'll build, you know, this liquidity. And you know, there's retail traders, when they see the market at resistance, right, they'll sell with their stop losses above. They see the same thing here, stop losses above. They see the same here, stop losses above, and below here, right, there's people buying, right, and they've got their stop losses below. So what will usually happen is, right, the dealer, right, can actually come grab these stop losses here, down here. Remember, this is a drop, base, rally, it's a reversal area, right, and then we expect the market to shoot up. So as you can see, right, we've got some equal lows here, and then the stops are hit, right, manipulated, and then the price will actually go and grab this money up here too, right? So if you actually trade after the stops are hit, right, when you actually understand liquidity and you know how to, you know, use it well with your strategy, right, you definitely increase your probability, right? So this is usually your trend line liquidity, right, for retail traders, you know, that trade with trend lines, right? So basically what we're going to look at today is these traps, and you know, how to understand that liquidity is being trapped and the probability that, you know, trading from these extreme points will give you. But in this case, you are trading from these extreme points by understanding the structure. The market structure is very important, right, and by understanding what's really happening and trading, you know, until the stops are hit, right? You need to wait for that, right? So you cannot trade, right, before the stops are hit, right? If you can actually jump into the market when the stops are hit, right, you will definitely increase your probability, because this is when we expect the market to actually move away from that zone, right? So we're going to look at an example today, and this was a reset on gold, this one right here. And we're going to understand, you know, what really happened for that reset to come up. All right, so from this area, if you look at gold, yeah, this is where, you know, we had the supply zone. As you can see, this was a drop, base drop, right? And I want to show you something, right? When price got to that area, price was creating liquidity, right? This is your liquidity right there, right? Definitely our traders got their stops above that area. We also created some liquidity here, right? And as you can see, the market actually pushed up, right? The market pushed up. Right, as you can see, that's just liquidity lying up there. So that was grabbed, but our supply zone was up here. So as you can see, the market manipulated, right? They relatively equal highs, right? And as you can see, this move here, this move at this area, all right, went back to the supply area, right? But look at how people were induced, right? As you can see, this was an aggressive move, hitting the stops, as you can see. Definitely hitting the stops, because retail traders, you know, would look at this and, you know, they can call it a, you know, as a resistance level, because I mean, look at that. That was support, resistance, resistance. The stop losses above this area. There, it was grabbed, right? It was grabbed. So that's if you actually jump into the market with such setups. So these are the type of setups where you're gonna have a supply area, right? And then the market moves down. Maybe the market does something like this. Market moves down, right? And then the market does this, right? And the market finally gets back to the sell zone and sells. So this is what happens, right? We've got this supply zone, right? But you're gonna get induced, right? By giving, you know, we see equal highs, right? After the equal highs, the stops are then hit. So these are, you know, the type of patterns we want to look at our peaks, right? Then we enter the market, right? As you can see, there's definitely liquidity which was grabbed there. So as you can see, from this area, we had 1 week of drop. Price moved back, right? Price moved back. And as you can see, I want you to see how, you know, retail traders were deceived at this area, right? As you can see, right? That liquidity being built up right there. All right, price gets back to this area. This is a hidden base. All right, and if we go to the H1 right here, this is what happened. All right, this is what happened. Right, from the peak, as you can see, we had a you know, a clean day of drop right there, which was our 1 week of drop right here. And then price went back up again, right? So from this peak, we want to focus on what happened from this peak, guys. Because, I mean, if we just look at this from a clear chart, this is what we have. Price went back to supply. Price went back to supply. But as you can see, before price went there, there was manipulation, right? As you can see right here. Stops were hit. We can see that candle going back up there. Then let me just move to the 1 hour so we can see what happened. Just move back a bit. Okay, right here. There we go. So you can see that when price actually moved from this area, right? Remember this, if you look at your cycle, this was actually on a Thursday, right? This is when we had this peak, right? Then price continued moving down. Right now, I want you to count your levels, right? You need to count your levels. Remember, this is your supply. So if you're going to count your levels, it means we had push 1 into a consolidation, another push into a consolidation. But I want to show you what was happening at that consolidation. And then we had the last push down. So that's 3 levels down. All right, 3 levels down, as you can see, and this is gold. So those are not, you know, those are good pips. So if you look at it right there, these 3 levels down pushed the market down here. All right, why? As you can see, we also had some imbalance right there. We had some imbalance, and that imbalance was definitely filled right at that area right there, as you can see. So price then pushed up, but I want you to see how this liquidity was being built. Right, look at that. Look at how this liquidity was being built. Right, and then remember your supply zone, your reversal is very important. Right, drop, base. So this is your supply zone. So remember, trade away from the peak. Trade away from the peak. Right, so there, price gets back, but look at, you know, all the stop losses that were above this area. Right, definitely manipulated. Then price went back up, right, giving us another opportunity. Look at that. Look at how this liquidity was created, right? And then it was grabbed both sides, as you can see, grabbed and then grabbed. But can you see that the game is on your highs and lows, right? That's where the game is, your highs and lows. So looking at it from, you know, price just played at the same area. After 3 levels, we had another peak, right? And price just continued doing the same thing, right? Coming back to these areas, as you can see, right? Price kept coming back. This was on a Monday, a nice drop, and then look at that. Look at the manipulation. We dropped on Monday. Most traders are probably thinking we're going to drop. Look at that liquidity being created, right? Look at that liquidity being created. Because I mean, if you look at your, you know, retail traders, that's a supply turn to resistance. Sell, raise your stops just above the area, right? And then there, grabbed this side. You see your blue traces, grabbed, and then a nice peak off the 200 EMA. Then price continued going down, and then the same thing continues to happen, guys. There, build up, trap, right? Don't trade until the stops are hit. So if we can actually, you know, move back to this day, if we can, there, this was your Asian session, and there, look at that. Probably used the news and then trapped, and then that's when you enter the market. This was a nice move down, right? So by understanding this, right, you'll be able to actually follow the cycle, right, by also counting your levels, right? Liquidity being created. We've got a nice peak, right, hit, and then look at this happen. This was a reversal on the Tuesday, midweek reversal. So you had a nice trade for the rest of the week, right? So by understanding your liquidity, this will allow you to actually make better trading decisions. And by, you know, looking for your trades at these areas, look at that. Now look at how this liquidity gets created there. So the game is on the lows, right? Money being grabbed, price gets back to your hidden base, right? We've got a nice decision point there. Same thing, you know, build up, hit, move away, right? We've got a drop right here. We've got a drop, base, drop, right? So our supply zone is actually here. Look at what happens. Build up, right, on the way down, and then trap, because most people were expecting sells here. Trap, and then finally get back to the supply zone. Same thing happens here if you zoom in, right there. We've got a supply zone there. Price break structure, right, and then slowly gets to the supply zone, right? You can see, right, the manipulations and the build up. We can also see that trend line liquidity, right, all that money lying down there, and then you can see a nice move down, right? So these are the trades that you want to catch, right? Just by understanding your liquidity, guys. Those are your trades that you want to catch. You know, you want to catch trades like this by understanding that, you know, liquidity is getting built, as you can see, right? Take it this side and come pick up all that money there, right? And by understanding that the game is all at the highs and lows, right? So it will be easier for you to actually now trade in line with the dealer, guys, right? It will be easy for you to actually trade in line with the dealer just by understanding that there's manipulations, right? So in this case, if you look at this recent trade that we had on gold, let me just move. Where is that? Is it, yeah, the last one. There. There. This is what we have. So price gave us a reversal, as you can see. This is a peak. This is responsible, you know, for the break of multiple structures. If we look to the left, right, that peak is responsible. All right, so as you can see, our main zone is right here. Right, if you take it to the 4 hour to be clear to see, there, this is where our supply zone is. As you can see, this was responsible for the break of this structure. Right, look at that. That was also liquidity which was built, grabbed. All right, so now prices are getting back up now. Right, that's a reversal point. Right, so if you go to the H1, this is what we can see. That's our supply zone. Right, look at all this liquidity that was being built right here. See, let me just remove this. There, look at all that liquidity. There was liquidity just above this area, and that's where your supply zone was. We also had, you know, these zones here. Right, that's liquidity being built up, and then price went to the supply zone. Then, as you can see, price then continued going to the downside. Right, but as price was pushing up, can you also see the liquidity that was being built? Right there, traders are definitely there. We also had equal lows along the way, and then prices continued moving down, taking out all those people here. And then what we can see now is price is actually now back at a demand zone. All right, price is back at a demand zone. All right, so understanding your liquidity will then, you know, make it easy for you to spot good trades that actually move. All right, very, very important, trades that actually move. So you can see we also build up some liquidity there. Then price then reacted at that zone right there. So it's easy for you to actually predict this, because now in the H1, this is what you had, right? You know, you've got a peak formation, half a Batman type of peak. If you go to the M15, there, this is what you have now. You know, if you did not catch it right here, if you did not catch it here, right, you know, you can always catch it down here. Right, you got a 1350 crossover, and you've got a clean supply area. Right, and we had some traps. Remember, that's your zone. Definitely people, they got trapped. A nice M formation. All right, and then price just continued dropping for the day. Right, and then as price is dropping on your intraday setup time frames, that's your M15. Look at that, liquidity being created, confirmations and traps above there. All right, just by understanding your liquidity. All right, guys, so I hope you learned something from this video. Go and big test. If you're new here, don't forget to hit the subscribe button, leave a like and comment, and tell us where you're watching us from. And also join our free Telegram channel. Find the link in the description below for free signals, free setups, and more educational content.